Hi, everyone. I'm Todd Rosenbluth, Head of Research at VettaFi, and I'm so excited in New York. I've got my colleague, Cynthia Murphy, Investment Strategist at VettaFi. Cynthia, thanks for joining me.
Hey, Todd. Excited to be here.
Well, we've got lots of industry trends to talk about. Kick us off with the first one.
Well, first one, the big overarching one is that at VettaFi, we are big believers in ETF community. This is what community looks like, very close quarters. So we're excited to tackle ETF trends that we're watching this year. So first one that we've been watching, active management. I know it's been said a lot. We're all talking about the numbers and the concept that active management has arrived. It's here to stay. So it's something we've been watching not only in product development, but in asset flows, in excitement about it. I mean, what is standing out to you?
Yeah, well, we've seen some of the leaders within the active space continue to expand their lineup into ETFs. So we've got T. Rowe Price and Fidelity, Capital Group. We've been writing about how Vanguard and BlackRock have brought some of the best of their capabilities into the ETF space. And you're right, with the numbers, we're seeing more than a quarter of the flows have gone into actively managed ETFs thus far in 2024. And it's likely that that trend continues.
Yeah, I think what's interesting is that it's a space that's benefiting from credibility. So well-known brands, asset managers people trust are coming into the ETF space with active strategies. It's also benefiting from pricing. Pricing has come down a lot. So now a lot of active ETFs, they don't cost 1% anymore. I mean, they're allowed sub 40 basis points. So competitive pricing and maybe opportunity. I mean, difficult markets kind of open the door for active managers to show their stripes.
Right? Yeah, I agree. So that's a really interesting first theme. I want to come to a second industry theme that you highlighted, but I'll start us off on this of index innovation. So yes, index ETF still is the dominant part of the ETF marketplace in terms of overall assets. We talked about active is gaining in share in terms of flows, but it isn't just broad market strategies. We've seen a lot of innovation taking place. Give us an example.
Yeah, it's interesting. Like just this week, I was talking to some of the indexing folks at VettaFi, where VettaFi is primarily an indexing business, and I mean, we ourselves are putting out 10, 12 new indexes a year, sometimes entire families of indexes. So innovation is really strong in the space. We just welcome, an index that we're using with Amplify, thinner on the weight loss drugs. What else is thematic that's interesting?
Well, we're all coming up as we're recording this on the 1-year anniversary of the free cash flow ETF series kicking off from Victory Shares. So that's a more forward-looking approach. And yes, it's also happening outside of what we're doing at VettaFi. We're seeing some really compelling new products that have come to market that are tied even to some of the old stalwarts within the industry. So S&P continues to innovate and evolve. MSCI, we're seeing it in fixed income. Bloomberg is the leader. They acquired the Barclays business. We continue to see new product innovation that's happening within the fixed income marketplace.
Yeah, in truth, we get all excited about active management because it's kind of the new thing, but passive is going strong. Index development is exciting. There's a lot of new ideas coming to market, and we're excited to be watching it.
So we talked about active. We talked initially about index. We at VettaFi just recently had an alternative symposium, and you wrote some content into that. So is this the year of alternatives? And if so, is crypto part of that perhaps?
Yeah, I guess the crypto conversation, it depends on how you slice and dice the space. I think big picture, and you've done the covered call part of it, what we're seeing is appetite for alternatives like we've never seen before. I think the last number we looked at was something like $35 billion have gone into alt ETFs this year, which is huge for this category. It's more than 10% growth for the category as a whole. And it's just that pursuit of diversification, pursuit of risk management tools, and alternative income, which has been huge in the covered call space, which is something you've covered a lot.
Yeah, so since you set me up for that, let me go with it. So NEOS, we had them part of the alternative symposium. They've got SPYI, that's the S&P 500 income-oriented ETF that they offer. Goldman Sachs and JP Morgan. JP Morgan's been the leader within that space. Global X has a suite of popular products. We're seeing more innovation in that space. And yes, I teed it up, so let's just come back quickly to it. This has been, in my opinion, the year of crypto entering the ETF marketplace. 10 years in the making, the most successful launches that we've seen in certainly my ETF period of focus, where Fidelity and BlackRock and Van Eck and Invesco and others had a lot of success with their spot Bitcoin ETFs. And hopefully people are watching this before we get a spot Ether ETF, because that certainly seems like that's coming with some of those same firms likely to be part of the mix.
Yeah, and if you think that spot Bitcoin ETFs have been here, 5 months, and we already have a covered call Bitcoin ETF, we already have leverage Bitcoin. I mean, this show is just starting.
And I'm so excited to be covering it with you. I'm so glad you're part of our team. And thanks everybody for tuning in. We'll see you next time from the VettaFi offices in New York.
Thank you.